Hello everyone to our weekly webinar. Thank you very much for continuous support and continuous liking of our YouTube webinars. Today I've tried to merge all the previous webinars which we have done, mainly on the gap side. And because the gap has become very interesting, markets are entering into gap up and gap down mode. So let us just see Nifty. And when we try to see this, let's say on a smaller time frame, we basically observe over here that there has been sharp gaps. Okay, now let's understand what happens in this. Now sometimes he has opened gap down. So if we see over here, for example, market opened gap down, it came back up but couldn't go above these levels, again opened gap down, couldn't go above these levels. Okay, again opened gap down, never even reached to this levels. So okay, so here huge gap down and filled the gap, went all the way high but couldn't reach again, or you can say cannot fill the gap. So what's happening over here, every gap down which is happening is not being filled. So many people say somewhere in history it will fill, okay, but right now it's not getting filled. That means the strength of downside is way higher. Now this also gap down, comes back and again goes down to the same level, huge gap down, again tries to come back and then it retaliates, again he tries to come back, again goes down, and then finally tries to breach and try to fill the gap, you can say. So this is the process of filling this gap down which was there, and then again we see a gap down mode, then it again starts going lower, bounce, again goes lower. So here the gap is there, fills the gap, and then bounce happens. Now somewhere the gap downs are taking place and somewhere gap up is taking place. If you see here, gap up is taking place. If you see here, gap up is taking place, right? So here gap down is taking place. Again, there is a gap up which is taking place. And then here we can see again gap up happening and then starts going down. So idea over here today is to merge gap up and gap down both, okay? And let's understand how to frame our trading style if stock can open gap up or gap down. So the first agenda over here, let us make three important lines which will define our trading. The first line is your yesterday's close. So I have now over here one center line, we can say this is your yesterday's close. Okay, so we have one yesterday close. Above this we have, you can say, kind of resistance, and below this we have kind of support. So let's also name them so we are, everyone is on the same page. This is yesterday close YC. Okay, now above yesterday close, let's put something called as yesterday's high, or we can say some resistance or daily resistance DR, which becomes your daily resistance. And below yesterday close you have something called as yesterday's low, or we can say daily support. So some kind of support, or we can say yesterday close, and along with support we can even have or option level, right? So call put max OI kind of level. Same way over here you can have some option level. So all these things are already plotted on TradeClue that we already know. Now the agenda here is, let's say market has closed over here. Now market can open gap up and market can open gap down. What we are trying to do or assess over here, when the markets open gap up. So let's say market opens gap up. Now there are two areas where market can open gap up. This is the resistance zone. Now if the market opens below the resistance zone or the market opens above the resistance zone. So let's say market opens above the resistance zone. Okay, so market is opening above the resistance zone, and I try to say this above resistance zones market has opened and it starts coming down to this resistance. Please understand, price straight away has opened above the resistance zone. How do you define resistance? Or either yesterday's high or I am saying daily resistance or some options level, it opens up. Now, if it has to fly higher and not come back down, then it will follow something like this. So we are trying to say a U-shape format will come over here into existence. Okay, so what do we see over here is something called as downside. It comes over here, takes support around this DR and then starts going higher. So this happens if the price opens above the resistance zone. Whenever price opens above, comes back, this resistance is now no longer resistance, it acts like support, then it starts going higher. Second, if the price opens between this zone, that is yesterday's close, and it is opening in the resistance zone, then if let's say it opens somewhere over here, okay, and again when it comes over here, there is an interesting part to understand. The price starts coming down to yesterday's close, and if it comes down to yesterday's close, and if it doesn't go below yesterday's close, so if the price is not going below yesterday's close, again we are seeing some kind of recovery. Okay, so this again acts like resistance. If it goes below yesterday close, then it can go further down. So I'm trying to see if the price is open up, is it open above the zone? Yes. And then it sustains, can I take a trade over here? Right, so when it sustains over here, if I trade, this will act like my stop loss and I can enter. Or if it opens over here, let him come back down, then I enter over here, keeping this as my stop loss. So idea over here is to enter in this reversal or U-shape format which is there. Third case, which is also very interesting, it can open gap down. Now if it opens gap down between the support range and the yesterday close, so somewhere over here you can say, okay, so it opens somewhere over here, and then again the same agenda happens. Okay, it opens up over here, comes back down to the support, and then takes a recovery. So in each of these cases, we are trying to take a buy trade. Okay, so in each of these cases, we are taking a buy trade. So that's the basic idea over here. Okay, so stock opening gap up, it can open here and here. Stock opening gap down, it can open here. Now let's understand if it opens down. That means if it is opening below the daily support. Okay, so you have the fourth agenda also aligned, where we say if it opens in this area, even below the support. So if it opens below the support, then people think that now everything will go down, it will not come back up. But sometimes you have a surprise where it might take a little bit of, you can say, sideline activity, and then again it starts going up. So in all these cases, when I'm trying to understand over here, is just to find my buy signal. Now, obviously, finding this buy signal is difficult because it is below the support range, right? So going below, opening below this will act like resistance. Continuously, he will stop him. But if it is conquered, it can also go higher. So this is a little different compared to A, B, and C. A, B, and C, the first three arrows are easy. Opening up, taking this as support, a U-turn, coming here, again taking a U-turn, again coming and taking a U-turn. So idea over here is now stock can open gap up, stock can open gap down, stock can open way gap up, stock can open way gap down. But in all these cases, we are looking for a U-shaped recovery. Okay, kind of U-shape taking place in each of them. So that's our today's webinar, where we are trying to focus that can reversal take place. Okay, like this. Opening up also, again it starts going up. Opening down also, it starts going down. Now things become tricky sometime. How? It opens up and just flies. It opens up and just flies. Now what happens with people when it opens up and starts flying? We tend to enter, and that becomes days high and the price starts coming down. So why this U shape, or you can say a V shape, or any kind of reversal format works well? Because when it comes back down, okay, where this acts like support, we are entering over here. when we enter here, the stop loss is very small. I'm not saying every time this will work, but all I'm saying, if you are entering over here, the stop loss is defined. Okay, so when the stop loss is the bottom of the curve and this stop loss you try to enter, you know your exit point. Same way, if it is reversing from a support point over here, there is a line, it comes and reverses. If I enter, this becomes your stop loss. So what's happening in each of these cases, the reversal format that we are trying to see or understand over here is very clear, that we are trying to enter with a small stop loss, right? So that's the basic idea over here, U-shape recovery we can say, or U-shape reversal we can say. Now please understand, 70% of the time markets behave like this. Okay, so either they are making U over here or they make inverted U's over here. So inverted, we'll take it in the next week or so. The agenda of today is an upward move. Okay, so since the markets have corrected a lot, we will be seeing these kind of moves happening more often. Okay, so idea is very clear, where we know that in each of these formats we are trying to enter when there is a support line. Okay, so that's the basic idea over here. So now let's take some examples. First, let's only observe, is it happening or not. Okay, so let's take case by case, couple of examples over here. So example over here is the market is open gap up, and after opening gap up he comes back down and then starts going higher. Okay, so comes back down and then starts going higher. So that's the basic aim, where it comes back down. Now it doesn't go even below yesterday close, that's good, and then it starts going higher. Let's see over here, it opens gap up, comes over here, just see what happens. Doesn't take a U-turn. Okay, that's a clear agenda. He's not interested to take a U-turn, it's just going down. Okay, so the bearishness is very, very visible. Let's see, even over here, market open a little bit of gap up, and just see in the first 15 minutes, game over. It's just going down. Okay, so the trend gets decided. If you see over here, the trend gets decided. But here, when the markets are opening gap up, comes back down and then starts going up, right? So this shows you that strength is there on the buying side. It is opening up, coming back, giving you a chance of entry. So if you're trying to enter anywhere, let's say even over here, you are clear. If you're trying to enter here, this last up moves have happened from here, they become your stop loss. If you're entering over here, this becomes your stop loss. So idea becomes very clear when you're trying to take this kind of reversal. Now if you go back and check as many days you want, these kind of sharp sellings, they do not come, right? So 73% of the time in last 5 years this happens. What happens? Kind of reversal activity takes place. Okay, so whenever you have now market opening gap down, straight down, from here also you can see the upside reversal takes place. Now when it is going up, we need to see, so when we see over here, it has opened down, let's say this has opened down, and then it starts going up. When it starts going up, this line has to be breached for the next level, then this line has to be breached for the next level. So when you are trying to enter over here, 50% of your position should be exited in the next level, so that whatever profit you have earned on 50% of your position, you can trail or you can hold your remaining 50%. If I buy 100 shares, I sell 50 shares, and the remaining 50 shares in my hand, this stop loss is free. Please understand. So I can wait for him. Okay, fine, you go over here, come back, go to the next level, come back, and then go higher. So that's how you should do your trade management, which becomes very, very simple, and ride the trend. Now, many people trying to focus in a different format. So example, if I'm buying over here 100 shares, then I'm trying to go up. This will be my first target. Okay, this is my line which is coming through. Now it can obviously go higher or it can stop over here. Then again, it can, let's say, stops over here, tries to come back. Now do not trail your stop loss. People have habit of trailing stop loss, and when you trail stop loss, he will make you exit your stop loss. Okay, and then see the funny fact which happens over here, it goes to the next level. Okay, and then again over here he tries to take a small reversal. Why does he do that? Reason is clear, next level has come, and then again you have an up move taking place. So it's obviously not a linear line, it always keeps going, the gyrations are there, the pullbacks are there, and that's where you get triggered. So what I'm trying to say here, when you enter with a small position, okay, even a one lot of Nifty, okay, two lots of Nifty, one exit, two lot out of one you exit, one lot if you keep open, this is the profit that you should achieve. That's where the risk reward 1:3, 1:5, 1:10 can happen. But if you exit all over here, game over. So then you will keep playing with 1:1 risk reward. Okay, so holding your position is the key. But all I'm trying to say, whenever you mark in the entry, the stop loss is defined. So I'm not worried about the profit, I'm more worried about the stop loss, and that's where the reversal formats, they help us to use proper stop loss. Okay, so whenever I see over here, this is where again the gap down took place, then he's trying to go up, then he starts going up, and we know this is your yesterday close. So again we will bang into what, some kind of resistance, and then it comes back over here and again starts going higher. So all I'm trying to say, the reversal will come, and if you enter here and then you trail your stop loss, you are out of the game, and then he starts going higher more. Okay, so if you're trying to enter somewhere here, just see the moves are rapid. Okay, so even over here when we see it opens a little bit of gap up, comes back, hovers around this yesterday close move, then again starts going higher, and if you're entering over here, your stop loss gets defined. Okay, smaller is the stop loss, and then you can keep riding these kind of moves. So that's what we are trying to target over here. As I said, even these formats where downside circuit happened, then it opened up and again went down. So in circuit scenarios, things can differ. But again, when we see, when the gap up has taken place, it starts coming down, there is no U-turn taking place, sharp selling, no U-turn taking place, again selling, just see what's happening on this. So it's around this yesterday close mark, it starts coming down, the candles are becoming smaller, so the momentum of selling is less around yesterday close. So it has come over here, it might take support, then it starts going higher. So when you enter over here somewhere which is above kind of yesterday's close mark, this is where good entry takes place. This is your stop loss, and then you can ride the rally. So this is the basic idea over here where I am looking for reversal. This is your yesterday's close. So this is where it can open gap up between the resistance zone and yesterday close, comes back, goes higher. It opens above the resistance zone and goes higher. It opens gap down and then goes higher. So all these lines will get defined once you see this happening, and then you are in a mindset to take a reversal trade. Okay, now it opens up and starts going down. So there are days where you can say sharp downside has also happened. So last 2 days has been in that fashion. Straight downside goes down, here also straight downside goes down. So if I enter over here, my stop loss will be this. So it's huge. So here you need to understand you're trying to take a trend trade. So yet we have not discussed trend trade. We'll take a session on trend trade, how to take a trend trade, because here it's gap up and keeps going down. So there is no reversal activity happening. But I'm saying 70%, 73% of the time this will take place. Not one side down, not one side down. So that's where we are focusing today on the reversal structure. So let us take some scenarios and we can be pretty clear. So let us go back. I'm going to 31st recent data where Nifty had opened gap up and then it started going down. So I wanted to understand first over here when the stock or index is opening gap up. Now let's understand this is yesterday's close. This is DS, which is your daily support, and then this is your DR, which is your daily resistance. Suddenly market zooms and opens gap up, solid gap up. Okay, now many people have asked how you are getting DR and DS. As I said, you can also get your demo login of TradeClue. So all you need to do is just go on tradeclue.com. once you go to TradeClue.com, you have something called as new registration, right? So you can make use of this and get your own login over here using the reference code TC228. So you get your login, and once you get your login, you will get these levels automatically placed. Now these levels also have good history. So we have tested for 5 years, 83% they are accurate. Okay, so the accuracy of every symbol is roughly around 65% to 93. So on an average, it is 83. Specifically for Nifty and Bank Nifty, it is more than 80%. Okay, so assumption over here, stock opening gap up. When stock is opening gap up or index is opening gap up, so this is which case, let us understand. This is yesterday close, it is opening above DR or resistance zone or so, straight gap up. So this is not case here. If you see A, B, C and D, we are talking about the first one today, A. So this is A, comes back over here to DR. Let us see now what happens. Okay, he's sustaining at DR. He's trying to now go below. Yet, please understand, there is no reversal happening. It might come to yesterday close and then the reversal might take place. No reversal happening. No reversal yet. Now you can clearly see something kind of reversal taking place. But he has yet not conquered DR. It might go till here and again it might reverse. You might want to stop and see. Now we are very clear. The 10 minutes sustenance above DR. So he was trying to go down. The seller was pulling him down. Now the buyers have arrived and they are pushing the price high and it's above DR. So when I buy over here, I'll keep this as my stop loss. So that's the basic idea. Or if you're buying here below this DR, you keep your stop loss. So idea over here is when you're buying, the base or maybe below the resistance mark can be your stop loss. My assumption is it can go into reversal. Now let's see over here, he comes back to this DR zone, sustains above DR, and he's again making a kind of W format. If you see over here, kind of W format, and then he starts going again sideways towards day's high, couldn't go higher, again comes back down. So if you have tried buying over here or here, so one lot, as I always say, when you buy, exit one lot fast, because this is your day's high. Obviously some selling has come in the morning, some kind of selling will come in this area or two. So exit one lot fast. So if I'm buying over here, keeping this as my stop loss. Okay, so this is like 8450, assuming over here, and 8410. So this is like 40 point stop loss, right? So if I buy two lots over here straight, if you are getting your 40-50 point stop loss, cover over here, just exit one lot. Now whatever stop loss is there, this is free. Now I don't care even if the price comes back below DR and triggers my stop loss, because I've already earned the stop loss. That helps us to hold the position longer. Okay, otherwise you will keep watching the moves and you will get rattled and I want to exit. So once your stop loss is free, you are the king, right? All you need to do is keep back, sit back, relax, keep roaming here and there. Do not see your position. Okay, and just see after 3 hours or maybe at 3 o'clock what has happened to Nifty. So that gives you biggest gains. And then we see comes back not below DR yet, trying to go high. This was the previous high, tries to go a little bit down, and now you have final takeover taking place, and then starts sustaining above this, little bit of downside again, sustaining above this, little bit of downside. Let us understand why he's taking time over here. We are clear here, there is some kind of resistance, this and this zone. So there will be some resistance in this zone because this was in prior days close. So the agenda is, we know that some kind of resistance will take place. My question is, after opening gap up, we are trying to see for a reversal. Okay, now sometimes, as I have said, the recent move which has happened is something like this. It opens up but straight goes down. It opens up and straight goes down. So it goes below yesterday close. Here also this is yesterday close, goes below yesterday close. But this guy opened above resistance zone, did not even go below yesterday close. Chances are very bright that reversal will take place. Now I will add a star pointer to this, where you will be more sure. How can you be sure reversal will happen? So let's assume we are standing over here, prices are going down. Now he started reversing over here. But I have still a dilemma. How do you know reversal will happen or not? Let's understand. Please see from last 2 days what is happening. So if I just draw a line, this was the open, this was the close, this was the open, this was the close. From high to close, for 2 days, the stock is falling or index is falling. Chances are very bright that it has opened up and the reversal will take place. Please understand, from A to B, B to C, if it is going down, people tend to sell. They become bearish for a very third day. If they become bearish for third day, now sometimes they win because it goes down, keeps going down. Now, if it keeps going down, if this was supposed to go down, we will never enter, right? Because it's just going down. But my question is, I have 70% probability that the reversal will come. Why? Because you have downside and downside taking place. So if downside and downside is happening, quite a better chance is there reversal will take place. Okay, so that's the basic idea over here. When does the reversal come? So let's say even before the market starts, I know the stock has gone down for 2 days. Chances are very bright for what to happen? Reversal to happen. Now wherever it opens gap down or it opens gap up or above resistance or between this point or between that point. The chances of A, B, C, D to happen is very, very, very high. Okay, so a star pointer when the reversal will take place is very clear now. If the stock has corrected for 2 days or so, then chances are much bright, and I would say and quantify more than 80% of the time the bounce comes. This is nothing but a bounce. Okay, so whenever the fall happens, a small bounce will always come, and in that bounce we are looking for our reversal entry and trying to enter with a small stop loss. Now you know that chances are bright of reversal. Plus you know that why it is bright, because it is falling for 2 days. That's the basic idea over here, and this is why the reversal can give you sometimes best trades. Now let's take few stocks also apart from Nifty. Let's say Dr. Reddy. Let's assume what has happened over here. Now this is a different story altogether. And we'll go a day prior also, which is also fantastic. It is opening down and then reversing. Okay, this is like gap down and zoom. But let's understand this part where it has closed up over here, open higher, and then goes all the way to the top. Now when it is going all the way to the top, let's understand what has happened in the last 2 days. One day it has gone up. So if you see here, the closing was there, here the closing is there, kind of one day it has gone up. Okay, so kind of we can say yes, it has gone up. So if one day it has gone up, let me see prior to this what has happened. So this was the open and this was the close. So kind of we can say one day it went down and one day it went up. So it did not go up 2 times. So whenever things go up 2 times, 3 times, then this kind of reversal, like third day also we are looking for an up move to take place, which becomes difficult. But if you have sideways activity taking place, it's going down and then going sideways. How do you know sideways? You can go and track, or I can clearly say 2-day high. When you have 2-day high in the same proximity, it is very clear for 2 days this stock is going sideways. So not even we have to go and analyze all this. It's very simple. 2-day high means it has gone sideways. So either it has gone down for 2 days or it has gone sideways for 2 days. And if it breaks that channel, the bump can happen, and we want to capture that using reversal. Opens gap up, starts with a green candle, again resistance, 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 and 2-day high acting as resistance. All these are resistance, but he has zoomed one way to the top. Then let's see what happens. It starts coming back down. All the gains which were there are now being removed. Okay, now what do we see over here? We see some kind of buying is coming by, again some selling has come. Okay, but he's not breaching the open over here. He's not even coming to yesterday's close. He again makes a spike over here. Then what do we see? First time, if you see, this was the entire selling area, selling area, selling area. First time it is breached. So kind of reversal pattern forming this as the base. Now if you are trying to enter again, this becomes your stop loss. And then you see that it's trying to go back down, it's not going your way, no problem, again it starts sustaining, starts going higher. So when you're trying to enter here, this is your stop loss, and then it starts going higher, please exit. Buy 100 shares, sell 50 shares. So your stop loss is now free. Once your stop loss is free, you are the king. It is now sustaining above the resistance zone. Very good. We'll go further, high, and so on. So idea over here is to capture the reversal. And how would you know, even the start of the day, before the day starts, how do I know that this reversal will work or not? The reversal works because of two criteria. A, the stock would have gone down for 2 days, then these kind of reversals will work fantastic. Or stocks are going sideways for 2 days or more. And that is why we have in aftermarket, there are queries called as triangle breakout, hourly consolidation, daily consolidation. That means stocks are going sideways. Okay. And when you have stocks going sideways, chances are very bright that this kind of reversal formats will work well. So rather than you figuring out all the stocks, you can just click on these queries, get the answer. So that's the basic answer for understanding the reversal patterns. We did Nifty, Dr. Reddy, let's see Asian Paint. And Asian Paint was also again classic. And the reason is again very clear. We see the Asian Paint had zoomed down, went up, again went down, again went up, and then it closed over here. But if you see, this is the range. Okay. And some people call this as kind of triangle breakout. So already it came in our triangle breakout structure. Plus when I see Asian Paint, it opens gap up. After opening gap up, this is DR, your daily resistance. It opens above this, okay, and comes back down. Now I am in a dilemma. Will it go up, or maybe after this sell, it keeps going down? That can also happen. Or it can come till yesterday close and go up. Correct. So all these possibilities should be there in your mind. Now let's assume what is happening. Okay, fine, it comes back over here, tries to go up, but yet he has not conquered DR well. Not conquered DR well. Not conquered. What has he done? Clearly conquered. One of our webinar, we have covered base violation. This is exact base violation. Okay, but now we are trying to fix where the base violation is happening. The base violation is now happening and conquering DR. So not only the reversal, not only the triangle breakout, and conquering DR. It's very clear now. If you're trying to buy, if it comes back down till 1618 to 1626, wherever you want to buy, if you give a chance, this becomes our stop loss. Right? So your stop loss gets defined in this U-shaped structure. Then it starts moving higher and goes sideways, and again starts moving higher to the weekly resistance. Okay, so went from DR straight to WR. So idea over here is very clear. We are trying to look for these reversal structures. Okay, so let's see now a couple of more examples. Let's see TCS. And this was more interesting because when I'm seeing TCS, first thing to see over here, the stock went sideways. Again, he went sideways. That day it zoomed up, but he came back down. So kind of I can say 1 day side, 2 day side, 3 day side. Okay, it did zoom, but it comes back all the way within that. You can say low, low, and low. Now it suddenly opens gap up. Okay, so after opening gap up, he's opening around this DR, and this is your yesterday close range. Now there is also one line called as max put. So when you have one more line, this becomes your options line. So it comes over here. This line will also act like resistance, sorry, support. Let's see what happens over here. Okay, he's not going at least below this. Okay, it has come to yesterday's close, 1, 2, and 3. So I want to now see some U-turn is happening from yesterday close or not. Okay, fine. So that's very much good that it has stopped, and now you have some kind of reversal activity taking place. So selling has come over here. Let me see if he, again selling has come over here, comes back. If this gets taken out, because this why his selling has come over here. It's very clear because of the max put OI was over here. So you cannot just go one way to the top. But once this is conquered, we know it can go till here. Once this is conquered, it will go here. Once this is conquered, it has a range to go up to this format. Let's see what happens. Comes back, takes some support. Again, he's trying to reverse. So now he has conquered. When you're trying to enter here, your stop loss gets defined. Then you're trying to enter around this vicinity, trying to capture the reversal format which is there. Starts going higher. This again becomes his resistance zone. Comes back exactly to this point. Again zooms higher. Sustains. Now this time it doesn't even come below this. Starts sustaining around this range. Goes almost sideways. Again goes to this line where we know that some kind of resistance will come. Starts coming back down over here, then again he starts going higher. So idea over here is, this is the format of trade, okay, the reversal format which is there. So always try to enter over here, take out some of your profit, and then when you know these many resistance lines are there, so there is no clean sweep. But in Asian Paint, when you are trying to enter, it is very clear that once he conquers this level, just see the next level is straight to WR. So this gives you an agenda that we should not be in hurry to fold, we can hold. But in TCS, it is very clear that if you're trying to buy, you're trying to exit half of it. Now you know these lines are still there, one line, two line, three line. Then you can basically remove more, 30% of your position. If you want to hold, you can hold more. So for a longer upstretch. So that's the basic idea of catching these reversals. Okay. So all these times, whenever you're trying to look for reversal, you should look for these formats. So here again, if I see, let's see for Titan, and it becomes very clear that Titan went down, came up, went down, came up. So kind of, you can say, consolidation patch taking place. This is the max pain line which is there, and suddenly the Titan goes up. Then he comes back down to this vicinity of yesterday close, and then he tries to go back to the top. Okay, so this can also be a false case where he's trying to now go up. Now this is the line where we know max pain is there, and if he goes higher than this, if there is a green candle trying to reach higher, then we can again take a trade because he has conquered this. And once he has conquered this, we can see straight he can go to DR, and after DR he can go to max call OI. So it's very good that he has made kind of U-shaped pattern reversal around yesterday close, yet he has to conquer this level. Does not as of now. He should have gone higher. It has not gone. And then what happens? He comes back to yesterday close. That means he has not conquered this point. And then when we see over here, rather than reversing up, he starts pointing downwards. So idea over here, when you're trying to see, these are the lines which will help you. Unless the line is not conquered, you cannot take a trade. But some false cases will come. But ideally, when you take these kind of trades, then you will for sure understand which trades will not be a false trade. Okay, so that's where your fine tuning will come. But generally I would say this is the format that we are trying to catch, and this format works well if the stock has corrected for 2 days. So I would put one more pointer over here saying that works well. I would say this one would works well if stock has corrected for 2 days. If it has corrected for 3 days, more fantastic, you can say. Okay, so that's again much better if it has corrected for more. It also works for consolidation, or you can say consolidated stocks. Consolidation mode, a breakout can take place. So in both those formats, if the stock is corrected for continuous 2 days, you can look for A, B, C to happen and get into the trade. Or stock has gone sideways, that's called consolidation mode, even this can happen. So this two cases we can say are possible for both of them. So either in the consolidation mode or stock undergoing some kind of correction for 2 days or so. These reversal formats work fantastic in these two cases. Okay, so the cases which I have mentioned, the structure that I have mentioned, it's back tested. Okay, so it works well in these mode. I would say it works fantastic in the first mode compared to even the consolidation mode. So I would prefer this whenever things go down south for 2 days and 3 days or 4 days. Keep looking for these kind of structures and take a trade, and that will be the best trade to take. So your mindset should be clear before you even start the trade, right? So that's the basic idea today. The webinar was on U-shaped recovery, or you can say U-shaped reversal. Okay, and it can happen above the resistance zone, between the resistance zone, between the support zone, and even below the support zone. Stock might open below this, but then once it sustains above DS, then it can start flourishing higher, right? So you can make use of the platform. Now you can make use of the structure, and then you can execute your trades. Fine. So thank you very much for joining in for this webinar. We'll keep bringing now more. The next webinar will be on trend, where I want to catch this kind of down move. And there are many times the sharp down move comes or sharp up move comes, which is less, kind of 30% of the time, but how to know and how to catch, right? So join in with me in the next webinar of this TradeClue webinar series. Thank you very much for joining in.